Oh, today is Tuesday, the 18th of November, 2008, and the market closed. We had a mixed session today. The NASDAQ lost 3 cents on the Qs, but the SPY, we'll see here shortly, was up on the day. So that makes it, again, another closing low for the NASDAQ 100. Intraday, the lows from last week did hold down at that $27.28 level. Today, we saw that the market looked like it was making a push lower down towards that level, but buyers showed up a little bit ahead of that at 27.45, and you can see here that the market did experience a rally right up to the 2-day VWAP here at the end of the day. So it seems as though every day that 2-day VWAP lately has been acting as the pertinent resistance for some of these little rallies that take place. On the 1-minute time frame, you can see that it was a pretty choppy session for most of the morning in here, and then we finally, the market broke below the lows from yesterday. Once that support was given up, that's where this late day sell-off came, and you could say from a triangle in here, but realistically it was more of a break of support and back then down with lower highs and lower lows. It made this run initially for the daily VWAP, pulled back, and then was able to push up through it, but it got very choppy in there, and the volume wasn't it just wasn't convincing enough to really make it for a good tradable rally. It came right up also to the prior level of support that we had seen form yesterday morning, and then basically where we closed yesterday, and this morning we had seen that level tested twice as well. So this $28.40 level seems as though there's a little bit of significance to it for now, at least. We do still have a declining 5-day moving average, so we want to look at these rallies as guilty till proven innocent, and as good as a rally may get during the course of the day, in my mind it doesn't make sense to be holding them overnight, because we've just had so much volatility and news and that sort of thing that one encouraging thing, I guess, is that we did see heavier volume here in the last 20 minutes, and the volume has been generally a little bit stronger here over the last couple of weeks, and the market is resisting really pushing down lower through with any real fearful panicky waves of selling. I don't think that's again any reason to be a real buyer and think that you can hold on, but it's something just to make note of and think that maybe this support is strengthening a little bit in here, and obviously we're pretty oversold. We're getting close towards the end of the year, and seasonally it's a bullish time of year, but that's never a reason to buy. The only reason to buy, of course, is price action, and price action continues to dictate that sellers remain in control here. I still think that the level I pointed out yesterday, and maybe at about $27.20, ought to be significant. More significant maybe is getting back above that 5-day moving average, rallying up, pulling back, and then launching a rally from there if we're going to look for a bullish scenario. There's nothing in here to suggest that, but of course you've always got to be aware of all potential outcomes, and that way you won't be caught off guard. If you're prepared for any potential event, then you'll truly never be surprised, because it's something you have anticipated, and you can't say, wow, that was unbelievable, look at how I got stuck in this thing, or whatever excuses you want to make for underperforming in a market, because the market trends have been clear. Oil continues to weaken here further. It was down another 1.3% to a new closing low in there again. It's interesting you don't hear about Hibbert's peak anymore, the peak oil theory, or back in here people were wondering how much of this trend was exaggerated by the participation of hedge funds that were all trend traders and chasing performance. Well, how much of the sell-off are they attributing to hedge funds now? Because clearly there's still a lot of hedge fund liquidation, and I think it's being evidenced in oil, and it's actually now going to help our economy. So it swings both ways, but they don't ever talk about it when it's going down, I suppose. Let's take a look at the Russell 2000. Where's that symbol here? we go. This market closed down 22 cents today. This market did make a new intraday low. It took out that low of 44.08 right here from last week. So you can see we slightly undercut it, took a couple stops, and then the market turned right around and rallied. But similar to the NASDAQ 100 level, let's take a look at the 10-minute time frame actually. Here's the 10-minute time frame, and we'd seen this support from yesterday, tested early this morning. The market made this little rally attempt, but below a declining 5-day moving average. You've got to always look at that very suspiciously, and from there we had the sharp sell-off. Later in the day, of course, we saw that, and here's where that, it looked like maybe the market was going to get going to the long side, but here's the 1-minute time frame. Back to the 10-minute time frame, that's this little move right here. So again, back to the 1 minute, we see that late in the day we saw very choppy action, but it did close on some strength. However, it was right near this level, and support, prior support levels, they're not an exact line in the sand, as I like to repeat. I think I learned it from Larry McMillan, that trend lines should be drawn with crayons, not with a straight edge. So you got to give it some room in there. We're still at this prior level of support, which does have the potential to act as resistance. If we are to see any type of turnaround here in the Russell 2000, I think 46 is going to be an important number. And of course, we've got this larger trend line here that will come into play as well. So those are a couple areas to keep your eye on tomorrow if this market for some reason does decide to turn around. But again, all the trends remain lower. It's guilty till proven innocent. You've got to just continue to be extremely risk averse in this market. The financials were down another 1.5% today. They lost 17 cents, down at $11.75. So we've got a new intraday low, we've got a new closing low, and still really no reasons for bullish optimism in here. Let's take a look at the 10-minute time frame. Take a look at a couple important levels. I think $12 a share is going to be important, then wherever this 5-day moving average kind of flattens out tomorrow if we get some further strength. But the trend remains lower, so you have to be open-minded to the potential of a turn, but the evidence just isn't there yet. The semiconductors finished at a new low again for the last several years, and in fact on the blog I had shown that because these the SMH came public actually in the year 2000, that we don't have data prior to that. So instead, I decided to take a look at the Philadelphia Semiconductor Index, known as the SOX, and you can see here that we're close to the lows from October of 1998. The low of October 98, actually the low of November of 98. Let's take a look in here. The low of November of 98 was 255.71. So is that right? 250? It doesn't look like 255. 255.71. So we're at 10-year lows in the semiconductors here, and if we take out in the next day or two this 182 level from October of 98, we'll have to go back 12 years to find lows. So that doesn't bode well for the NASDAQ. The semiconductors typically lead the NASDAQ, and here we saw that this market was basically broke down through the support from, well, can't really call it support, the lows from last week. We'd seen those lows tested early on. They broke, the market came back down, but rallied right up to that level. So it wasn't able to get back above it, so we still have to be very cautious. It also made it up to this level, which is the downtrend line over the last 3 sessions. So this level becomes a little bit more important. You're about $16.70 or so. If it can get back above there, maybe we trap some shorts, and we've seen a give up from the longs, but perhaps we could see a turn up towards that 5-day moving average, and I don't really want to look too much further to the upside from there, because there's so many potential levels of resistance coming up that you've got to just take what the market gives you rather than try and create these bullish upside objectives. Because let's say we're looking for $20. Let's say it occurred like this. What we want to do is listen to that message of the market, and if it just started to decline right here at 19, well, you've got to take that trade and lock in the profits rather than waiting for forever for $20 that may not come or may come 6 months down the road after you've been blown out of the market. The SPY also failed to make a new low on an intraday basis and on a closing basis. In fact, the S&P was up $1.65 or 1.93% here today, closing at $87.12. So, that's one potential reason to be a little bit more optimistic, is that the S&P 500 did outperform all these other indices. But again, looking objectively at price data only, we've still got a declining 5-day moving average. We've got, it did make it back above the lows from the last 2 days. So there's a little bit of reason for encouragement. Whereas again, we saw that the NASDAQ, let's just take a look real quick there, wasn't able to recapture that level. The SPY did get back above it, but we've still got this declining 5-day moving average. I think that this 88 and a quarter level, we've got 70, 87.80 or so. These are all levels of potential resistance. We can't, people send me emails, hey, what do you think about this turnaround scenario? They're all good potential scenarios, but we have to look at objectively at what the market's telling us. It's not our job to try and guess what's next for the market, but to objectively observe what's going on and to place our bets accordingly. And if you want to get long as the market breaks resistance like it did here on the 2-minute time frame, and you can look at that and say, well, there's a nice little head and shoulders pattern, it's breaking the neckline there. If you want to get long in here and put your stop in it, then you've got a good trade. But how long that trade will be good is up to the market. It's not up to your bullish projections or any measured move or anything like that. You have to listen to the message of the market and view all rallies skeptically in a primary downtrend such as we're in now.